potential competition that could come. If Netflix starts doing sports streaming and gaining rights to that, or even Apple or Amazon or one of these big companies, we've already seen a few deals in soccer and football and so on. And in the environment where we are now, where there's less disposable income for the average consumer, people are able to invest less. It is just what it is. Hello everyone, welcome back to another FinMeUp Weekly Stock Watch, where we cover the most important stock market news with additional insights and opinions, all summarized so that you don't have to spend hours going through it every single week. This week we'll be looking at Thungela, Purple Group, Foschini Group, Telkom, Multichoice and Naspers. And in the US, we'll quickly be looking at Netflix, AI, and their inflation and what that means. Before we get into that, Paul over here is a financial advisor. He is my personal financial advisor when I invest in stuff like bonds and funds and etc. So if you want to book a call with him, there is more information in the description below, so you can read more there, and he'll also tell you a bit more. I hope you enjoy today.
Let's get started.
So Thungela has made a lot of money for a lot of people the past 3 years. Massive dividends. The share price went almost 10x. I think I wasn't one of the lucky ones that bought Thungela at the lows. But their earnings per share are expected to be lower by between 66 and 75%. That is because seaborne coal prices have fallen sharply due to a milder winter in Europe, softer gas prices and an increased coal supply to Asia. The capital expenditure is expected to be 0.7 billion rand, and they are sitting on a net cash position of 14 billion rand, and this company has a market cap of 22 billion rand. So there's a large position of cash compared to their overall valuation, and that's why they have been able to pay significant dividends. The reason why it is quite undervalued is the reason that it is coal, and investors are knowledgeable about the fact that coal might not be the long-term future for electricity. And there's a lot of other big things, but Paul, maybe you can comment on that. And the last point I want to raise is the dividend. So people have been loving Thungela for their dividends. Thungela remains committed to its dividend policies and aims to target a minimum payout of 30% of adjusted operating free cash flow. So they will probably still flow some proper dividends out of Thungela, even though we saw a lower EPS and profits. But I mean, they're still sitting on quite a decent cash position. And in the short term, coal is still used. Any thoughts on Thungela, Paul?
Thank you, Higgo, and good morning. It's super cold here in Durbanville where I'm sitting. I'm freezing. But okay, Thungela. So Thungela is one of those stocks that made a lot of people a lot of money. So also, I'm not one of those, unfortunately. I also missed the train. But it did a 10x, so in 1 year, basically 1.5 years, so it's quite incredible. At the moment, there's quite a bit of debate going on what if Thungela is actually undervalued or actually overvalued. Undervalued in the sense that, like you said, they're sitting on a large cash position, which is always positive, especially in a recession. And also, they're paying out a massive dividend, they're trading at a low PE and all of this. On the flip side, there's a few things that we must be cautious about, and let me maybe name a few. So, in my conversation with Charles Buerta, he explained to us that there's 5 factors that you need to take into account when it comes to any mining company. The first one is the price. Now, the price of gold went up from about $80 to over $300 in the last few years due to the commodity cycle and the Russian war and all of that. So this is their main revenue driver, is the price of coal. It's back now to about $120, so not $300 anymore, but it's still way above the historic average of about $80. So you can now argue, okay, it's come down a lot already, but it is still way above where it used to be. So if that comes down, Thungela is gonna still hurt a little bit. Next is the exchange rate. Now they export the coal, so in terms of that high exchange rate, a weaker rand is good for them, so that counts in their favor. Volume is solid. Now next point is the cost. So Thungela is pretty high on the cost curve. And I explained this in the article, maybe Jonta, we can just link that in the description. But what it comes down to is if you're high on the cost curve, your margins are a little bit tight. Now, if you have tight margins and the price of your product that you are selling, in this case coal, goes up by a little bit, it's almost like an explosion of profits. Or if it comes down a little bit, it's a massive crimping of profits. So what happened was in 2020, 2021, 2022, that price shot up, not a little bit, a lot. And Thungela made so much money they didn't even know what to do with it, and they paid out a massive dividend. Now it's come down a lot. So the price of coal is something that we really must take, into account here. And if you're bullish on the price of coal, you're going to be bullish on Thungela. If you're not sure where that is going, I would be very cautious to invest in Thungela. The last one is a life of mines. And the life of mines for Thungela is pretty short, unfortunately, which means that they're going to have to spend a lot of money within the next 3 to 5 years to actually explore new mines. And that's not a small cost. And maybe one more thing, the transport of the coal to the harbors and Transnet. Transnet is, I don't want to, it's not good. It's not good at what it comes down to. So there's a few factors here that I'm a little bit cautious about. Thungela is more of a punt to me. If I see, okay, I think the coal is going to go up, I think then I'll punt it. But for now, it's definitely not a long-term holding for me. So yeah, you decide for yourself.
Yeah, interesting. There's definitely a lot of people that enjoy the dividends, but there's also some risks to keep in consideration. Purple Group successfully raised a total amount of 105 million rand through its right offer. The right offer was oversubscribed, with gross demand exceeding 113% of the available rights offer shares. So once again, Purple Group's community is amazing. You don't often see, especially in South Africa, a rights offer being oversubscribed, especially now in the economic cycle that we are in. But once again, Purple Group community coming through. The price already came down to almost where the rights offer took place. The share price is now around 90 cents, and the share price was, or the rights offer was at, I think, 85 cents. So, the one thing with rights offers, dilution takes place, but at least now they are sitting on a proper cash position to invest further into growth. We all know about their growth options into Southeast Asia, into bringing out new products in South Africa, into the rest of Africa potentially. So there's definitely lots of growth opportunities. And in times like these, in terms of high interest rate environments, inflation, struggling economic conditions, that's when it's a great time for businesses to build and really focus on the next 10 years of where things might look better again. So currently, still, I don't own any Purple Group shares, but I am becoming very, very interested to nibble again at these prices. Any thoughts from your side on Purple Group, Paul?
Yes, I totally agree with you. I think the community in Purple Group is, it's an incredible community. The people are trading or investing with high conviction for the long term, and I like that. What I think, where is Purple Group actually heading? In my opinion, maybe a little bit lower still, but there is a price where Purple Group does make sense, and I think then we're going to have liftoff, especially if they can execute on the promises that they have made, or the projects that they are pursuing, the expansion opportunities, especially for easy equities. Then this company can really blow up, but that's still going to take some time. So for me, once again, the risk here is that the community, they are kind of exhausted now. No one has money to invest. We are in a recession, and there's a lot of people that already punted this thing. So we now need the big boys, one or two of the big boys, to actually step in and say, okay, I think Purple Group is a clear buy, and then the market value of this company will go up significantly. So let's see what happens. It's one of those FinTwit favorites where I can't go on Twitter without someone saying something about Purple Group. So I'm always in the loop. I'm very curious to see where this company actually goes.
Yeah, it's going to be interesting to watch. I mean, Easy Equities is really, really a good platform. I use it myself. And the thing is, Purple Group is volume based. They make money from fees, and fees happen when transactions take place. So when there's more volumes, more transactions, they make more money. And in the environment where we are now, where there's less disposable income for the average consumer, people are able to invest less. It is just what it is. So there's less transactions, less volumes, and also there's no retail hype at the moment. In 2020 and 2021, we saw a massive retail hype. YouTube channels that were posting about these videos were just skyrocketing. It was just that phase, and now that phase has also faded, because back then when you bought a share, it just went up. And now we don't see that anymore. Now you really have to pick carefully to not lose money, but also to make money. So it's volume based, and it's going to be interesting to watch how they perform over the next year as well. We are not out of the rough yet. I think we are quite deep in it. But somewhere in the future, it will turn again. And, at that time, I think, at a good valuation, it won't. Yeah, it's going to be interesting to watch. I'm personally, I'm interested to start nibbling. I haven't yet, and I'll let you know when I do, but it's looking interesting. Foschini Group, a bit of a retailer for a change, nothing tech or finances or commodities. The group revenue increased by 19.4%. Gross margin is lower by 0.6%. Operating profit before finance costs increased by 12.4%. Profit after tax increased by 4%. Basic earnings per share increased by 4.1%. And they declared a final dividend of R1.50 per share, which represents a decrease of 54.5% on that dividend. So lots of numbers. In short, I'm not a massive retail investment, so into actual retailers. As I've mentioned before, if I had to invest in retailers, it would probably be ShopRite and maybe even Pep. But just for my personal liking, personal experience, and where I find interest, retailers aren't really one of them. Paul, do you have any thoughts on Foschini Group? If we look at these results, lower dividend, although they posted a small 4% increase profit after tax, plus proper group revenue increase, which could be due to inflation as well. But what are your thoughts?
Yes, I think the main number here is the profit after tax increasing by 4%. So that's obviously below inflation. But given high interest rates, high inflation, and also economic recession, global economic recession, at least they're still, increasing the profits. But like we said before, Higgo, the main thing to consider here is lower household disposable income, and the households are obviously the ones shopping at brands like Foschini. Foschini is also a little bit more in the middle to upper class LSM targeted groups. So when that comes under pressure, that's probably the first place people will start cutting and rather go to your lower cost alternatives like Mr. Price or Pep. So I don't foresee, any massive growth for Foschini in the next year or so, unless something happens and we are all of a sudden, the recession is over and people have money again. It's going to trade flat for probably another year or two to come. So nothing that really excites me here.
Yeah. Okay. Multichoice, a company that I've never been interested to buy shares in, and I'll probably never will, just because I'm not a massive fan. But they actually reported group revenue increase by 7%, of which 4% was organic growth. Organic growth is the ideal kind of growth. Advertising revenues were up 7%, supported by the FIFA World Cup and local content properties. The group trading profit decreased by 3% due to adverse foreign exchange impact and a weaker South African earnings. Core headline earnings increased by 2%, which is mainly by the improvement contribution from the rest of Africa. And the free cash flow was down 48% to 2.9 billion rand, primarily due to working capital investment and major financial system upgrade. Here's the thing about, so I'll quickly mention my bull case and bear case. So to be honest, I mean, there's lots of moving parts, which I don't understand. But on the bull case, you've got quite a few World Cups coming up, okay? World Cups, obviously, there's lots of excitement about it. People have braais together to watch World Cup. It's a talking point. So that automatically does free advertising for Multichoice, because Multichoice has companies like, or platforms or channels like DStv, okay? DStv is what we watch your sport. And personally, I don't know where else to watch when the Springboks play or when the Proteas play or any of those kinds of sports. It's DStv is the place to go. So with World Cups, with big competitions, there's almost that urge to watch it for the sport. Then there's also various other channels that has various other reasons why people watch it or don't. But for me, the biggest thing is potential competition that could come. If Netflix starts doing sports streaming and gaining rights to that, or even Apple or Amazon or one of these big companies, we've already seen a few deals in soccer and football and so on. But if they start democratizing access to sports streaming, that's definitely a threat for Multichoice. And also, they're really expensive. Like the DStv subscription, I mainly watch it just for sports. When I don't watch sport, I watch movies and series, and I watch that on Netflix. So I don't really watch TV on DStv or the other stuff. I only watch it for sports, and those subscription prices are really expensive just for that. And that is also a thing in the economy where we are now in, and why we might see a further drop off. But I don't know. I don't have a crystal ball, but it's going to be interesting to watch how that plays out over the next 2-3 years with other big players potentially coming on board. But once again, there's also a big market for Multichoice. There's lots of people that watch SABC3 and various other channels that I personally don't watch. So that is why, just on a personal liking, Multichoice is not for me. Paul, any thoughts?
I think you make a few very good points there. You go, totally agree with you. I think it's also like it's a luxury product, so people tend to cancel these types of products in a recession. Also, the big reason why people probably still have Multichoice or DSTV is because of the sport. I mean, you can get movies from, I can name 10 streaming sites right off the bat, where you can get those for free. So I think the big reason is the sport, like you said, and that's actually a very good point that you are making. World Cups are coming up, so maybe people will still enable the subscription for a few months, and then after the World Cups, they'll cancel it again. Then maybe one point into the expansion in Africa. So this is something they mentioned. They want to expand into Africa, but that's, like we've discussed before on this channel, not as easy. The US and Africa always seems like the first places to go, the obvious ones to go, but it's not easy. Firstly, Africa is most of the whole, basically the whole Africa is middle to lower LSM. So it's not people that's going to pay R1,000 a month for a DSTV subscription. Secondly, we've got internet problems. And then also the big one is people want localized news and sport. Like we can go into Nigeria, give them DSTV. They don't want to see Bafana play. They want to see Nigerian people play soccer. They want to see local Nigerian sports and events. So you're going to have to cover that in that country. Now that is no small challenge. So let's see what happens. Multichoice, personally, I don't see a turnaround narrative for them anytime soon. I would not invest in this company.
Next company, final company for South Africa, just a quick trading statement. Naspers, we all know about Naspers. The earnings per share is expected to decline between 49.8 and 56.8%. That is a massive profit decrease. So we all know the story, or if we don't know the story about Naspers, it's a story for another day because it's a long story. And the thing is with Naspers, in short, they overpaid for assets. They overpaid for high growth assets, as many of us did, and as many VCs did globally. We saw it at the peak of 2020 or 2021 even. Massive valuations for unprofitable companies, and it just didn't play out with some of them. But they are now focused on getting these companies profitable, eyeing profitability for most of them by 2025. If I saw that somewhere in the trading statement. So look, they know what they need to do. They know that they made some mistakes with some investments, but also they are sitting on some quality assets. But just personally for me, I'm not invested in Naspers. I'm following the companies that they are invested in because it's really interesting to watch the entire startup space and how those companies are executing. And there are some quality companies in there, but just overpaid for assets. That's the bottom line. But let's see, maybe those assets start generating some proper cash flow over the next few years. Paul?
Yes, I think once again you're 100% right there, Higgo. They have been historically and is still trading at a massive discount to NAV. So the people aren't really backing all the investors aren't really backing all the investments that this company have made. The management haven't always executed on buying quality assets at good prices. Obviously, the main driver for Naspers is Tencent. So if you want to know where Naspers is going, look at Tencent and look at China. Now, China is very at a weird place at the moment. Post-COVID, I don't know. It's always been a little bit, now we're going again, now we're stopping. Are we open for global trade or are we not? Supply chain, all of that. So China is at a weird point at the moment. So I don't know what to say. Naspers is one of those. It's already the biggest company in Africa. Personally, as a retail investor, I'm not gonna invest in this company, but I really do hope that this company does well because this is our African representative in the global market. So Naspers has to do well.
Yeah, it's gonna be interesting to watch. In the US, Netflix, we just spoke about Multichoice. Netflix is in talks to live stream its first sporting event this fall, a celebrity golf tournament featuring professional golfers and Formula One drivers. As we mentioned, what if Netflix starts democratizing access to rugby, soccer, cricket, tennis, Formula One, all these sports? I mean, we already saw the success they had with Drive to Survive in Formula One. If they start doing that, companies like Multichoice, I think, will really feel it. Just because, for example, the only reason I still have DSTV is for the sports. So it's going to be interesting to watch how Netflix executes on the actual sport streaming sites and also the copyright or the rights to stream it. Also, in AI, The SEC is moving to introduce new rules for brokerages using AI to interact with clients. We saw a massive run in all things AI, semiconductors, companies that just put the word AI in their websites. There's definitely a lot of hype going on in AI, and I'm a bit cautious about all those AI names at the moment. But there are still a few good ones, but I won't be surprised if we see some sort of a pullback in the near term before we then gradually start seeing an increase as adoption actually takes place. We have an AI data and new technology basket on Easy Equities, on the US side of Easy Equities. So you can check that out, where it's some of our favorite AI names, new tech, data, all of that. Because with AI, you need data, you need semiconductors, you need so many different elements. So, with a basket, you get access to all of those. But having said that, AI is really at its peak. What do you think, Paul?
Yes, it almost reminds me of the dot-com bubble in the 2000 to 2002, where all the companies basically put .com after their names, and all of a sudden, they got an influx of investors. So just be careful, guys. AI, it's weird because AI can be adopted so fast. I mean, look at ChatGPT. They hit 1 million. I don't want to give false statements here, but the adoption was like immediate. It was incredible. So that it's not to say that cannot happen, but with AI, it's like crypto way back when. All of a sudden, there's 1,000, 1 million companies, all of them doing AI, and people want to invest because they believe it is the future. And especially with new technology, you have to be careful. Of course, it is the future, of course. But not all of those companies are going to make it. Only a few will. Like in the beginning of the internet, there were 1 million companies. Today, we only know the household names: Google, Microsoft, Tesla, with automotive AI and so on. So just be careful. That's my comment.
Yeah. So on AI, look, the .com, nobody really knew what was going to happen. But with AI, we actually know what the tools are with video editing, with creating images and designs, with so many things. We all know the use cases of AI, and now we've started seeing the use cases. But I mean, just with design alone, let's say website design, already there's like thousands, if not millions, of AI platforms that does it. So I think what we're saying is AI is going to be huge. It's already big. It's just going to become bigger and bigger and bigger and bigger, probably forever. It is probably going to start to be regulated to some extent. I don't know what that will entail. But where there's millions of AI companies, not all of them will make it. There's a space for only a few. And it's going to be interesting to watch. And, the big dogs, the people, the companies sitting with lots of cash, the Microsofts, the Apple, the Googles, my money is on them. But there is different segments of AI: the semiconductors, the data, the software, the actual use cases, who leverages it. So there's so many things and different parts of AI, but it's very, very interesting to watch. And finally, CPI for May in the US came in at 4% growth year over year, and that's below expectations of 4.1%. Paul, what do you think of that? It's a pleasant surprise, and we've been seeing their inflation come down month in, month out.
Yes, this is great news. There's a lot going on in America at the moment. There's a lot of things that can still go wrong. A lot of conspiracy of they're actually not in the recession yet. They're actually going into the recession with the banks and all of that, structural elements actually failing. But when it comes to inflation, I'm so glad to see that we're actually down to 4% again, because that's going to mean that they're going to stop their interest rate hikes. If they stop, we're going to stop not too long after them. And do we need it? Do we need to stop the hikes, because people are really suffering? So if you can just put a pause on that for a moment, let that lag for another few months, and then start decreasing the interest rates, that's gonna mean so much for a lot of people. So I really do hope that this is now the end of it and inflation stabilizes.
Yeah, and bonds are also looking attractive. If you don't really follow bonds, let us know in the comments if you want us to do a video on bonds. What makes bonds go up? What makes it go down? What is it? And then we can do a video if there is a need to find more about bonds. So you can let us know in the comments.
Leave your comments below.
Thanks for watching. Consider liking if you find some valuable insights. We really appreciate your support, and thanks for being part of the community. Remember, you can download the app, you can play the daily quiz, and we've got a few exciting developments coming for you. So stay tuned, hit the subscribe button to not miss anything in the future, and watch the Santova video if you want some more insights there. Hope you have a great day. Cheers.